Hey guys, and welcome to the Working Money Channel. XRP on the hourly. Look at that. Over the last hour, as I was doing the research for this video, we have seen a decline for XRP price. So it's looking like a bit of a sell-off here. We were holding throughout the overnight at around 37 cents. And now we are finally seeing the decline. So I've got XRP right now on the 5-minute chart. I don't usually bring up the 5-minute, but this is activity that is happening right now. So just over the last hour, we are seeing XRP taking a bit of a tumble. If I throw that back on the daily, it's not actually as significant as that initial uptick that we saw. So, just comparing XRP to other cryptocurrencies like Bitcoin, for example, we are still seeing or have seen a tremendous movement to the upside for XRP compared to other cryptocurrencies. Let me throw Bitcoin on the hourly for a second here. And just to show you guys, I drew the neckline here for Bitcoin over this inverted head and shoulders pattern, and it's looking as though on the hourly we have actually moved past that neckline, but now it's looking like Bitcoin is trending a bit lower, and I think this is why we are seeing that downward momentum for XRP. Looks like it's back in step with the rest of the crypto market, meaning Bitcoin, the leader of the pack. So right now, Bitcoin's trading at $21,100. And as I mentioned, XRP trading right now at about 36 cents. And I know, guys, I was going to tell you when I got into another cryptocurrency position. Well, just yesterday, it was kind of a crypto position, but not quite entirely, and I'll explain why in a second. First, I just kind of wanted to hammer home this point. From Crypto Caesar, those telling you they can gauge the bottom perfectly are talking absolute nonsense. And I've said this since the beginning on my channel. It is absolutely impossible to know for sure when you've hit the bottom. And so the best way to handle that, follow charts to make your best prediction. If they do get it correct, it's lucky and nothing else. In 2018, I bought a significant amount of Bitcoin at $6,000, thinking it was maybe the bottom. I was wrong. Bitcoin then went down to $3,000, where I used the last of my dry powder to increase my position in down cost average of approximately 4.6K per BTC. Everyone was calling a 1K BTC at this point and not willing to release capital into the market, Tony Vase included. At the time, did I feel the pain? Absolutely. Did I gauge the bottom perfectly? Absolutely not. Looking back, was that a good trade? Absolutely yes. Did all the idiots calling $1,000 get filled? Nope. Did they all buy back in at $10,000? Well, probably. So the lesson here, guys, never deploy all your capital in one go, always ladder in, wait for extreme pain and buy the blood even if it's your own, except you will never be able to gauge the bottom perfectly. Don't listen to plebes telling you they will be able to gauge the bottom perfectly. So, some words of wisdom here, and I gotta say, I have been in this position as well. Let me tell you guys, when I was down cost averaging XRP way back in 2018, I made the mistake of thinking, this was the bottom and this was the bottom, and I just kept buying up because I was still fairly new. I had just gotten into crypto at this point in time, and I wasn't quite sure at that time how this market rolled. At that time, I did have about 7 years experience trading typical stocks, so I was just treating the way I traded the same way I would in a typical stock market. So I was down cost averaging finally by December of 2018. I had maxed out my XRP position and I thought to myself, okay, I got to buy something else. And at this point in time, this is when Bitcoin fell off this cliff. And I've mentioned this on this channel in the past. This is where I bought up the bulk of my Bitcoin, and it was at around, I'd like to say $3,500, $3,600. And at that time, Bitcoin had gone down as low as $3,100. So, I mean, really, I was pretty close to the bottom. And again, I feel like this was one of the best trades I've made in crypto, so far at least. And so to the position that I just got into on Friday, which was yesterday, when I was saying it was kind of a crypto position, but not quite, it is QBTC. Okay, this is an investment vehicle on the traditional stock market correlated to Bitcoin. And I'm just going to let you guys know that I got in and I'm laddering in. I did not deploy all my capital as Crypto Caesar also warns not to do. I got in on this position earlier in the day, and I would have mentioned it in yesterday's video, but I had done it after I'd recorded both videos yesterday, so I thought I'd bring it up today. So this basically just follows Bitcoin, and it's similar to GBTC, if you guys are familiar with that. And I got in at $27.75 approximately, and right now it's trading, well, the market's closed right now because it is the weekend, but it is trading at $27.81. So I told you guys I would let you know if I did get into any positions. I'm still holding on, waiting for my altcoins, and I think next month I will buy more into this QBTC. It is for a retirement savings plan that I have, a registered retirement savings plan. So it's a bit of a different angle that I'm approaching here. This is a long hold for me, but I am finding that, the bottom is quite near for Bitcoin. I think even if it does go lower, I'm going to ladder in and also keep some money on the side for some of those altcoins that I do want to down cost average on, like Algorand. I want to increase my position in Cardano ADA, maybe a couple of others. Anyway, thought I'd let you guys know that. This is the big news though. Apparently Celsius Network, which has paused crypto withdrawals for weeks now, has hired advisors to prepare for potential bankruptcy as per the Wall Street Journal. So, reading this from Cointelegraph though, crypto lender platform Celsius Network has reportedly onboarded advisors from a management consulting firm in advance of the company possibly facing bankruptcy. According to a Friday report from the Wall Street Journal, Celsius hired an unknown number of restructuring consultants from the firm Alvarez and Marsal to advise the platform on potentially filing for bankruptcy. The report followed one from June 14th, which said Celsius had hired lawyers in an attempt to restructure the company amid its financial issues. So this is the latest that is occurring right now. Celsius has been at the forefront of discussions in the media around significant volatility in the market. Obviously, they were illiquid and they were holding customers' cryptocurrencies and unable to fulfill sell orders, so they just froze everything. CEO Alex Mashinsky and other Celsius higher-ups have been largely silent on social media since the announcement, with the platform saying on June 19th that it would be suspending discussions on Twitter Spaces and AMAs to focus on addressing issues with the operations. So there is that, and just on the tail of that, we're also now hearing rumors Goldman Sachs is looking into buying Celsius's assets for $2 billion as it is advised to file for bankruptcy. The irony, or was this the plan the entire time? So Goldman Sachs is allegedly shopping around for investors to form a Web3 fund to purchase Celsius assets. The multinational investment bank is raising $2 billion from a wide range of funds to take advantage of a potential discount on Celsius crypto assets. Should Celsius be forced to file for bankruptcy, it might be required to sell off its assets quickly to pay back any creditors. The exchange has allegedly already been advised to file for bankruptcy by Citigroup and Akin Group. The news was initially reported by CoinDesk, which cites people familiar with the matter as the source of information. So Goldman Sachs looking to swoop in. How many of you guys are actually surprised about this? Legacy banking want to get into the crypto game, and if they can get it at a deal, why the heck not? They do not want these Silicon Valley crypto companies to thrive in the financial space. So what are they doing? Waiting for opportunities and potentially buying up these types of companies. Ironically enough, a company that is against banks being bought up by one of the big banks. Irony not lost there. This is an ever-developing story that I will follow up on, guys, if I hear some more news about it. Wall Street Silver here posting this. RIP to the US dollar? Is this big or is this just a nothing burger? Russia and China are brewing up a challenge to dollar dominance by creating a new reserve currency. So here we go, guys. The BRICS countries, Russia and China, are developing a new reserve currency with other BRICS countries. This coming from Vladimir Putin. The basket currency would rival a US-denominated IMF alternative and let Russia widen its influence, an analyst said. The dollar's dominance is already eroding as central banks diversify into the Chinese yuan and smaller currencies. Russia is ready to develop a new global reserve currency alongside China and other BRICS nations in a potential challenge to the dominance of the US dollar. Well, these nations were already working together to facilitate trade in and amongst each other, especially since Russia had been slapped with those sanctions from the West. So, this is just another logical step. We know that Russia has also been working on a SWIFT replacement so that they can facilitate cross-border transactions. It will be running on DLT. We have also heard through the grapevine that Russia was trialing, or a Russian company was trialing RippleNet at some point in time. So we're still kind of waiting to hear if that is going to be implemented in the system. President Vladimir Putin signaled the new reserve currency would be based on a basket of currencies from the group's members, so Brazil, Russia, India, China, and South Africa. And here's a quote: "The matter of creating the international reserve currency based on a basket of currencies of our countries is under review. We are ready to openly work with all fair partners." So dollar dominance continuing to be challenged now from BRICS nations. This from digital perspectives here. Why do we need 10 or 20 private stablecoins? Here's a great question asked by Brad Garlinghouse at the Collision Seminar in Toronto. I believe this was just from yesterday. Speaking up on stablecoins, listen to this.
Well, did you mention Terra Luna just now?
Yes.
Because I think that's less an example of a scam and it's more an example of creating something that maybe just shouldn't have existed in the first place. So, all right, so, there are payment stable coins where they're backed by a currency, and there's a new proposal from the Biden administration that, those should be regulated like banks and they should have deposit insurance, which, okay, I don't know what you think of that.
I'm not sure is the short answer. I think stable coins as a category, I think, have a role to play, particularly in domestic settlement. I haven't yet seen exactly where the U.S. is going to come out here. Other countries around the world clearly are doing more ahead of the U.S. and how they're kind of approaching central bank issued digital assets. What's confusing to me is why do we need 10 different U.S. dollar stable coins or 20?
Right.
And if the U.S. if the U.S. is going to do a central bank issued digital currency, why do we need private dollar stable coins also?
Right.
That gets a little confusing for me.
So maybe.
All right, good. So I'm glad I'm not the only one. Why do we need all these stablecoins? That's a very good question. I've also thought that myself, especially if the U.S. is going to be issuing a central bank digital currency. Right now, I think the market is just saturated. There's a lot of companies trying to be the dominant player, I suppose, and some are going to falter. This is why we're also following the Tether story, because although Tether is a very popular stablecoin pegged 1-to-1 to the U.S. dollar, there are a lot of questions surrounding it, and so is there going to be another stablecoin that replaces Tether dominance, and is there going to be, or are there going to be regulations preventing some stablecoins to exist in the future in the United States or in other countries even? All very good questions, all speaking to this idea that a new financial system is indeed coming, and all countries are kind of participating in their own way, whether it's creating a CBDC or, as we're seeing with the BRICS countries here, brewing up a new world reserve currency or a new reserve currency, at least for their purposes. Then we've got Ripple here, smack dab in the middle, utilizing the XRPL and utilizing XRP as that liquid currency to help facilitate these cross-border transactions. An XRP sister coin, XLM. We haven't heard too much about them with regards to many developments, although we have been hearing about some partnerships that have been occurring, namely partnerships where companies are partnering with Ripple and Stellar to provide some type of new service or something similar. Well, here's something interesting brought up by Crypto Eddie here. So John Deaton, maybe Gary Gensler can explain it to me. How is XLM not a security when it is the only source of revenue for Stellar? They are selling on centralized exchanges to retail investors and are very clear and transparent about this. What am I missing? It almost sounds counterintuitive, doesn't it? This is Denell Dixon from the Stellar Foundation being interviewed. Crypto Eddie posted this to kind of demonstrate how hypocritical this might be. I guess hypocritical is not the word, but why is the SEC not focusing on Stellar as well? Maybe this is also why we saw Stellar pump yesterday with XRP. Anyway, listen to this interview and how Denell Dixon categorizes or classifies the XLM token.
Judd founded both, co-founded both Ripple and the Stellar Development Foundation. And originally it was a fork, I think, for about 8 months, and then they rewrote the entire code base.
Even though Lumens is the native token, you aren't necessarily looking for all of these transactions to be, facilitated through the use of Lumens, that you're actually just as happy for them to use other stable coins. Why don't you tell me about that?
We sell Lumens. The Lumens were the assets that were provided to us at the outset of the creation of the foundation. We sell them on centralized exchanges. We make sure that folks understand that we do that. So we try really hard just to be as honest and transparent. But none of the revenue, all that revenue comes from, the revenue for the foundation comes from the sale of Lumens. We try to keep it very small in terms of the amount that we sell. And we also then don't take in any other revenue from anywhere else. And what users who are sending value look for is a stable asset that they can leverage to make sure that they send and receive the same thing. So that's, we think stable coins are the best. Blockchain is awesome at solving cross-border payments and just payments generally. I mean, we are building smart contracts into the network. That's going to feed you liquidity into payments. That's going to happen later this year. We have an automated market maker in the network as well that folks can leverage from a wallet standpoint. You can have wallet interfaces there. There's also the DEX, and so those are leveraged for payments. We have 30 different stable coins that are issued on the network that are based on local currency that are one-to-one fiat backed. We think payments should be in stable coins. USDC Stellar is one of the big ones that lots of payments companies want to leverage, wallet providers want to leverage. So you can have wallets that are connected to Stellar, and very simply, through an API with MoneyGram that MoneyGram has made available, working with us, you can then take your cash into a MoneyGram location and immediately convert it into your digital asset of USDC, and then do what you want with those assets, because your crypto, your wallet, your keys. And we had an over 500% year-on-year growth with respect to payments volume, and that's awesome because that's what we want to see.
So a lot of things here that Danelle Dixon mentions. Crypto Eddie also picking up on this. Stellar sells XLM lumens on centralized exchanges, and it is the only source of revenue for the Stellar Foundation. Also, to be clear, Stellar is currently not a fork of the XRP ledger. This video was from this month, June of 2022. So, it's an interesting question. Why hasn't the SEC tackled the Stellar Foundation in the same capacity as they have Ripple and XRP? It could be that, maybe it's just a matter of catching the big fish and regulating the heck out of it, and then that those rules will kind of disseminate throughout the crypto industry and affect companies like Stellar, considering they are, at least from my knowledge, they are probably the most similar cryptocurrency to XRP, considering the founder, Jed McCaleb, was a co-founder of both Stellar and Ripple. So an interesting point here that Danelle Dixon makes. And another interesting observation here, guys, from Tag XRP, perhaps linking Vitalik Buterin to something bigger than maybe we had originally thought. So I think we all know the story of Vitalik Buterin wanting to work at Ripple, but got denied because of his visa application. Have you guys seen the movie Sliding Doors? It's basically a movie where the main character is set up in a situation. There are two paths, and she decides to go one way, and her life ends up being a certain way because of the path she chose. But then it goes back, and it's really creative the way they do it. Goes back, and if she decided to have gone the other way, it shows what her life would have been like at that point. And I believe there are some other nuances in the movie. I saw it a long time ago, but it brings me back to this. It reminds me of what happened with Vitalik Buterin at that time when he was looking to get an internship at Ripple. Could there be another angle to this? So Tag XRP brought this up. In 2013, the largest member of the Federal Reserve System, so you got to remember, this is 2013, before Ethereum, and right kind of at the beginning of OpenCoin, when Ripple was called a different name, when it was called OpenCoin. JPMorgan filed an application that appears to be building a competing centralized network to Bitcoin. Ripple was and still is their biggest competitor. So this was back from 2013. An article here looking to build a system that rivaled Bitcoin. Now, this was one of the big banks. And again, 2013. The main narrative that we have been hearing from big banks since that time was always crypto is for fraud, crypto is for criminals, we're not touching this thing with a 10-foot pole because it is just too new and we do not think it belongs in our legacy system. Well, apparently back in 2013, they were looking to actually create a competing system that would kind of be like a Bitcoin but centralized for banks. Interesting, because this is the first I've heard of this. And so here's the link to the patent. So Tag XRP also just bringing us the link to that patent from all the way back from that time. Then he retweets out this tweet that I mentioned this past week from Warren Davidson. It's certainly possible that the stalling tactics to prevent regulatory clarity for digital assets in America are related to the Fed's CBDC project. If there really are people engineering a reset of the monetary system, off-ramps with self-custody are problematic. Now, I dedicated an entire video to this because there's this hint of a conspiratorial questioning, I think, from Warren Davidson. If you guys didn't see that video, I will link it up here in the top right-hand corner. With this idea that, the financial system is being engineered for a great reset, so to speak, a great financial reset. And so CBDCs were one part of that. We've always had this question of why is Ripple being sued in court by the SEC if it is indeed supposed to be part of this new financial system. So Tag is bringing this up, but also wanted to bring this to our attention. Kind of weird how Vitalik couldn't get his Visa to work for Ripple right before they filed this application. But what do I know? I'm just well, I think we all like a little dose of this every now and then. Anyway, some people speculating about this, like Conspira XRP Theorist here on Twitter. I was thinking the same thing, quite possibly a plant from the very beginning. And Tag responding, I absolutely believe he was. So, was Vitalik Buterin purposely set up to be an intern at Ripple to gather intel in order to create a new system for the big banks? And so, did he have anything to do with this project? And did that later become the Ethereum Foundation? All things that make you go, And was it just serendipitous that he wasn't able to get his Visa? Had he gotten his Visa, would Ripple have hired him? And where would the story have gone from there? A completely different timeline where the cryptocurrency industry no doubt would have gone in a different direction. Instead, he did not work at Ripple, and so he started his own thing, Ethereum, and he was basing it off proof of work, Bitcoin, that type of blockchain system, unable to really kind of comprehend what they were doing over there at OpenCoin, later named Ripple Labs. A superior system, Bitcoin 2.0. Would the timeline have been different, guys, had Vitalik worked for Ripple? The other thing that kind of solidifies, maybe not solidifies because it's still just very wild speculation, but gets me thinking is the fact that now we're seeing Goldman Sachs looking to buy Celsius, as I've mentioned earlier in the video. John Dean here with a couple of tweets. Do you get it now? This has always been the plan. The big banks have wanted to commandeer these DeFi companies that are trying to thumb their nose at the legacy banking system. And so now it's looking like they're attempting to make their move with a perfect example here is the Celsius bankruptcy. Everyone should keep this in mind every time you read anything Wall Street says. So again, this was back from 2018. Goldman Sachs said Bitcoin is never coming back. Meanwhile, Goldman Sachs is raising money to buy Celsius assets, says a source, confirms Fortune magazine. So here we go, guys. A new financial system. These guys have always wanted to get into blockchain DLT, and they didn't really have an opportunity until now. So was Vitalik a plant? Tell me down in the comments what you guys think, and please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.